One of our supporters is Bank of America, Merrill Lynch. And we're thrilled this morning to welcome our first keynote speaker, Yvonne Ike. So Yvonne is the managing director and head of Sub-Saharan Africa at BAML, with more than 20 years of experience in financial services, including capital markets, operations, and fixed income, derivatives, equities products. Yvonne has led pretty much most of the elements across the bank, including teams in New York, Geneva, Hong Kong, Nigeria, and South Africa. Previously, she was CEO of the West Africa at Renaissance Capital, where she was responsible for the firm's West Africa franchise. She was also a managing director at JP Morgan. She's passionate about many causes. She's a trustee of the Bridge Leadership Academy, the Christopher Collade Foundation, and the Dangote Foundation. We're not the only ones to recognize Yvonne's great work. She was recognized by the Queen as one of the top 200 businesswomen in the UK. So with that, I'd like us to welcome our first keynote speaker, Yvonne Ike.
Thank you, Peter. And I want to thank the entire team at Oxford Business School, for Saïd Business School at Oxford University, for inviting me here today. More importantly, I want to thank you for the incredible work that you're doing, not just in terms of showing everyone up on the focus on Africa. 12% is huge. It's massive. And apart from that, the work that you do in terms of highlighting and discussing the issues that are important to Africa at this time, and frankly, helping all of us to think about how we reshape the continent of Africa in our lifetimes, frankly, immediately, is something that is really, really commendable, and it's an honor for me to be here today. Today's topic is particularly pertinent, just given, and you know, it's one of those conversations that we can take from so many different angles. I'm going to try hard to constrain myself on the financial aspects of it, but you know, there just are some other places that we just have to touch on. I work for Bank of America, Merrill Lynch, and our SSA strategy is very clear. We, as the organization globally, is the one of the top 3 banks in the world. We operate in more than 150 countries. Our primary services are commercial banking, investment banking, and asset management. In Africa in particular, and we leverage our global networks. We leverage our global networks for commerce, and we also leverage it for important initiatives, which for us span across arts, education, and a number of other initiatives, healthcare, AIDS in Africa. And even when we shape our businesses, we're very thoughtful about what we do and where we do it. So hardly surprising, our SSA strategy, Sub-Saharan Africa strategy, it revolves around servicing the key sectors in the economy, like telecoms, like financial services, like the retail and industrial businesses, like advising the governments as well. So those are the main areas that we work in. And it matches where we see FDI coming from. It also, importantly, matches where the things that will drive the growth of Africa's development in the near term. So 50% of FDI projects were in telecoms, technology, retail, consumer products, and financial services. And that's been quite a consistent figure. I want to talk today about the changing dynamics of financial services in the context of redefining the African consumer. My first challenge with this was to say, okay, how do we redefine something that hasn't been defined properly before? How does that work? How do we redefine something that 40% of it exists in an informal part of our economy that no one really knows or understands, and we're just simply unable to quantify? How do we find solutions in that kind of scenario? Just going back to Peter's point, the reason why we're here today is to have these conversations and think about what we're going to do about them. So how do we do that? How do we define the African consumer across a very beautifully complex and diversified continent that is often referred to as one unit, Africa. So how do we make those connections and think about solutions that really help us drive change in our continent, which must happen and can happen in our lifetime? I'm actually thinking in the next like 5-10 years. And I'm going nowhere soon. Over the last 20 years, I'm not even going to spend time talking about is Africa rising or isn't it rising? It's frankly a boring conversation. Let me just lay this down. In the last 20 to 30 years, Africa has evolved positively in the right direction. And there is no debate about that. So the number of important indicators, and that includes whether we look at economic development, population growth, compounded GDP, this evolution has spiked at different times, challenged by global and regional macro, political, and economic events, particularly in recent times. But what that makes us do is actually think of really what we mean about Africa and what we mean, and then decompose the Africa story into what I call into layers. So some of the layers are just simply unchanging. We have a population that will continue to grow regardless of what the oil price is, regardless of whether we have good leaders or bad leaders. We have a population that is fundamentally young. We have a population, we have an economy that, in spite of some of the challenges that we've seen, for the most part, has slowed in its growth rate, but continues to rise. We have a population that is becoming much, much more exposed to the benefits of technology, to mobile, to digital advancements. And there is very, very little that some of these negative aspects of our world can actually do about that. And that is why this topic is so very important. If we can figure out a way to continue to harness prosperity, not growth, because we talk about GDP growth, and that sometimes is a very contained, meaningless thing. We all know that 50% of, rather, there are 50 billionaires who have over $100 billion, and they have more across Africa than at the bottom of our pyramid. How does that work? So when we look at some of these trends and structures, it is complex, but we do have a very well-endowed economy, and we do need to think about how we tackle some of those issues. So what I'm going to talk about now, in spite of this growth, in spite of these underlying trends, as I call them, the next layer, though, is what is happening to prosperity of the people. And this is where we still have a problem. So this population is growing. Some people talk about it as the democracy dividend, prosperity dividend, a number of things. Today, over half of Africa's population is still earning less than $2 a day. Today, we still have too many people in the outside of the formal sector. Today, we still have very limited financial solutions for our entire country and community. And so it's important that we look at and redefine this group, because a critical success factor for Africa's evolution, for prosperity's sake. And what I mean by prosperity is where the people in Africa, on the broader spectrum, see their lives improving over time. Not just a small subsection of us, but this burgeoning group of people who could potentially become problems for us going forward. Because if people are not satisfied and they're dissatisfied, that's not a good thing either. We need to solve for that. So I want to spend, before I go into the financial aspects, I want to talk about just a little bit more, a little bit more of a look at the African consumer. I talked about most of them. So the AFDB defines people living on $2 to $20 a day as the middle class. That middle class is predicted to grow threefold to 1.1 billion over the next 30 years. Most of that population is very young. 62% of our population is under 25 years old. In order to understand and influence real growth in prosperity, we must shift our focus to the bottom pyramid. We spend too much time analyzing the emerging middle class. And this is why there is much debate about whether Africa is rising or not. Because for as long as the bottom pyramid is increased, because the numbers are, so even though the population is rising, as I said earlier, and income is growing in the country, the population is rising faster than income is growing. And the bottom pyramid, which rose at 3.1% across Africa, is growing faster than the general population growth of 2.6% across Africa. So until we include the bottom pyramid together with the emerging middle class, that's when we start to have an important perspective of what the African consumer really is. And that's why, and if we look at the things, it's also important to consider the things that drive that growth, which we all know, but I must speak about them today. So Africa, we will experience exponential growth more widely if we continue to provide relevant and appropriate goods and services to the emerging middle class and the bottom pyramid. We need to also provide them financial solutions. One thing that I want to talk about a little bit later is the fact that this group is more vulnerable because they're typically less educated and less exposed. And therefore, thoughtful regulation around customer protection, around protecting their assets, as we include them into the financial sector and into the economy as a whole, is very important. So and if we look at even mobile payments, for example, how we have cohesive regulation that protects the consumer across the countries, because a lot of this activity now will work better if we have cross-border activity as well. But who looks after these people if we take them further into the banking sector through the most common mechanism, which is mobile payments? Is it the telecoms regulators, or is it the banking regulators? Their perspectives are very different. Their requirements are very different. How do we unify that in a way? And this is one of the things that we can apply our intellectual capital and our platforms to doing, to say, this is something that will go. We're all excited about the growth of mobile payments, but who is sitting down and thinking about how we harness this to the protection of these consumers as we drag them into this space and give them more benefits? If we have these things, power, technology, as well as mobile payments are also very important. We have an African consumer today that is leveraging opportunities that, frankly, haven't been done anywhere in the world. East Africa is pushing the boat out and leading the charge on, for example, mobile payments. We have an Africa now where someone can use a solar-powered television or internet to seek medical or other essential services, or frankly, non-essential services. And we have drones delivering medical services and saving lives in Africa, places like Rwanda. So typically in the space of technology and mobile payments, East Africa is leading the charge. And what we need to do is see more of a unification in terms of leveraging more where the economies like East Africa are better in some of these things. Those are frankly, I really believe this. These are the three things that are really going to fuel the growth in the consumer space. I imagine, 10 years from now, so almost 3 election cycles, let's go to 3 election cycles. if these people have more information, more money, and more access to goods and services, I'm quite sure we will see a different type of leadership in Africa, because their voice will be louder, our voice will be louder, and we will speak up, we'll stand up and speak about some of the things in leadership that we're helpless for today. The most important, there's so many aspects of the financial sector that I could speak about. In the time I have, I've chosen to speak about one, which is really the developments around financial inclusion. And it's because, firstly, when we talk about the emerging middle class, as Peter said earlier, we're talking about an increasing size of people getting $1,000 a day. It's still very low. It's still very low. So the extent to which we have financial inclusion solutions that will bring, and this will be driven by mobile payments primarily, and digital technology, that the extent to which those bring the users into the economy in a way that is well regulated is very important to counter what we're seeing today in terms of a bell effect in the financial deepening phenomena. So when the financial markets are growing faster than the access to those markets, you start to see great inefficiencies, and we need to tackle those by increasing the access, the accessibility, and the affordability of those solutions to financial inclusion. And what that means is I can see, given the growth rates I was talking about earlier, in terms of bottom of the curve versus the more established constituents that have banking services today, in the next 5 to 10 years, actually the institutions that focus on financial inclusion will be the more relevant providers of financial solutions across credit, across savings, pensions, and insurance, some of these things which are critical for fueling, assisting in fueling growth in the economy. Okay, I've halved my speech, so I'm just going through it. So Africa rising, is it rising, is it not? That's not really the conversation. And let's not have people define this for us. And one important thing about the Africa Rising story and the solutions therein is that the solutions must come from Africa, and Africa collaborates with the developed world. I went to a discussion yesterday, and I still had a fellow African saying to international organizations like mine, "What are you doing about the bottom pyramid in Africa?" Nothing. Because we're not wired that way. My primary goal as a stakeholder of Bank of America is to make money for the region, to take what we do very well across the world, apply that which is relevant to Africa, and make money. In addition, because of the kind of institution that we are, and frankly, the room was full of institutions like Bank of America that do think beyond making money, that do want to go into the environment and make a difference. However, we cannot do it if the initiatives and ideas are not coming from the continent. We need to drive it from there. And what that means is, even from a financing perspective, how we handle some of these initiatives and what they do to the consumer must first come from the continent, and then organizations and platforms like ours can work together to deliver the kind of growth that we all imagine must happen and can happen. So the collaboration with the Western world is actually very important. And I think that also importantly, one of the biggest pieces missing in the puzzle is the collaboration, particularly across West and East Africa and right across the continent, because there's very exciting things that are happening. There is a young lady I met with a company called Bee, who's quite advanced in developing solutions for analyzing credits analyzing consumer behavior that allows you to lend to the bottom pyramid using mobile telephone usage. So the analytics around that is giving some pretty insightful information about the character of the borrower. And therefore, we get ourselves into a very organized way of lending to a group that is still very unclear and unknown, but we don't need to have the rigor and structures of a credit system. So I think sub-Saharan Africa is where Asia was about 20 years ago. It is on the cusp of a boom. Should it have happened earlier? Yes, perhaps. Will it happen? Why do we want to debate that? The indicators are very clear. And it is going to be driven by rapidly increasing growth in consumption from a rising number of households with growing discretionary spend, fueled by advances in power, technology, and mobile. I say that because actually what we really need to look at in the grand universe of problems is not that big, or is smaller than it could be, is another way I would put it. So thinking deeply about how we influence those sectors. How do we so renewable energy has all the constituents. The natural resources are in Africa, the people are there, but the biggest issue we have, or one of the biggest issues we have, is financing renewable energy, and it comes back to this credit point. Because if we can't assess the credit, then people are simply not prepared. The private sector is simply not prepared to take the risk of rolling out as fast. So how do we task ourselves with finding credit solutions and financial solutions for renewable energy that will fuel growth? How do we continue to make mobile payments and mobile platforms and digital platforms and the internet far more accessible to the consumer? So the bottom of the pyramid will be a key driver to this growth phenomenon. The rapid development of financial inclusion is the most important financial ingredient in ensuring real growth in prosperity. Africa remains complex and considerably diversified, and will require market-relevant solutions that will vary across the countries. The solutions must increasingly be driven by us, Africans, and when I say us, I really mean Africans and friends of Africa. And I'm sure we all know here that we have an Africa, like the rest of the global world, comes in different shapes, sizes, and colors. That's what we're talking about. Anyone who gets Africa is an African as far as I'm concerned. So the solutions will be collaborative, and I can see an Africa that goes to a point where within 10 years, financial inclusion will drive real growth and prosperity for the bottom pyramid and the emerging middle class. But as I implore us all to take our eye a little bit away from the emerging middle class and spend a bit more time on the bottom pyramid. Thank you for your time.
Wonderful comments about bottom of pyramid versus the kind of emerging middle class, financial inclusion, which is an area of great interest of mine as well. For Africa, by Africa, not one uniform solution across Africa. Lots to start us with. So now it's your turn. You have an opportunity to ask Yvonne questions. There are microphones of all types. Oh, we're throwing microphones today. By the way, don't get hit by one of these microphones. All right, so there's a health and safety warning. Catch this thing and make sure it doesn't hit someone else. So who'd like to start us off with questions? And if you could just introduce yourself briefly, make sure it's a question.
How does it work? Hello? Can you hear me? Okay. This is a very weird-looking microphone, but okay.
It works.
I wanted to ask a question pertaining the availability of data. Because once you have a richness of data, which is available in the developed world, from there can you gain the insights to create new products, services, and things like that. But that seems very hard to come by in Africa, especially with my friends and my community within the startups and things like that. How do you think we can overcome that barrier in terms of getting better quality data and having this accessible to people to create innovations and things like that?
I mean, you're right. I mean, in the time I had there, I had to choose my topics, but one of the biggest issues we have in Africa at the moment is the lack of data. And in fact, as Peter and I were discussing earlier this morning, there is increasingly more data. Actually analyzing that data and making meaningful sense of it is still a huge gap in our society. So this is where, and I was really serious when I said earlier, if we focus on technology and telephony and mobile and digitalization, it solves quite a number of problems we have. If we use those platforms to gather data, I talked about mobile, yes. If we use those platforms to gather data and analyze them, it is information that we can give to the governments. It is information we can give to businesses, because government policy will be much more directed. In a world of scarce resources, if they could do more with less information, more directed information is what I actually mean. It's something that the governments can benefit from, businesses can benefit from, and frankly, entire society. And even when we have foreign investors or the Western world looking at Africa, they can do it on a much more informed basis, and that will help drag down the stereotypes. But in terms of how we do it, I actually think we need to lobby for and insist on having data centers, and but it has to be data collection and analytics, and then how we disseminate that information. I think it's a very important gap. The only way I can, because it's not commercial on its own, because what's happening is lots of people now are starting to gather pretty smart data. The challenge is everyone's keeping it to themselves. And this is why we need to lobby for there to be investment. I call it the information imperative. We need to lobby for investment in data analytics by governments, and also by, this is where if people want to give aid or help to Africa, it's one of the things that they could do.
So my name is David. There are two questions that I want to ask. First one is, I think, having lived in Africa and having doing business for consumers or business, we know that cost of capital or like source of capital for the credit is actually, there are two problems. One is scarcity, so you don't get a lot of credit for small and medium enterprises. Second one is cost capital is very high compared to other developed markets. So in your view, what kind of the steps that we can take either to increase the source of capital, but also to reduce the cost of capital for SMEs or the rising middle class? And the second question I have is, in your view, is it ethical right now for the banks, commercial banks or telcos, charge really high interest rate or cost the lending interest rate for the bottom of the pyramid and the SMEs? So,
okay, let me take the second question first, because that's why I was batting on earlier about regulation. It's one of the most important things to address. So this group that we're trying to bring into the formal economy and provide proper goods and services to are really quite vulnerable. They have no idea what they're even being charged. And so the regulation around what they're charged. I mean, we've seen, for example, in the Nigerian economy, the banks used to run ramshod, charging quite high fees to customers. And the central bank in recent times has just said, no, stop. I mean, everything you did was charged for. So it's it's an important and urgent point of regulation that we should look at that. Really, as we're bringing these people who are quite vulnerable into the economy. The first question you asked about the sources of capital, and I think today that there's quite a lot of sources of capital, and I don't think that that's do we have too much capital? No. What I think is important, what I think is the big gap is the ability to deploy that capital. That's where I see the issue. So I see lots of people with a lot of money. So, and if you look at, if I think about the evolution of the financial sector in Africa over the last 20 to 30 years, we started 20, 30 years ago, probably a bit further down, there was really just grants, aid, and poorly funded governments. That was how Africa was running. And today, you have the public capital markets. Already this year, Sub-Saharan Africa has issued $10 billion. You have this is the governments. You have corporates coming to the market. You have the banking sector stronger. African-focused development agencies, global development agencies doing more. Private equity firms, sovereign wealth funds. So the sources are increasing. What we're missing is the ability to deploy the capital. And I think we need to focus on that first as a bigger priority than actually finding more sources of capital. Because the truth is, the more people make money, more money will flow into the region. And the cost of capital is that's a harder topic to address because that typically rests on the bed of the strength of the macro of the economic management across Africa, and so that's what will drive that. And I'm not sure I can think of ways to really draw that down. I think but the more we have accessibility of information on capital. And the more, because what accessibility does is allow more people to offer the same services. And the ability to compare will bring down the cost of capital. But there's still structural issues in our major economies that mean that our cost of capital is still too high for now.
Can we lob, actually, you have one there, and then the next one, maybe over here. That's not too long a throw. And then the one in the back after that, the woman in blue. So 1, 2, 3, and then that might be it for questions, I think.
Okay.
Yes.
Oh, sorry. Thank you very much. So I've actually spent my career doing bottom of the pyramid financial inclusion initiatives, and there's a very big...
So you know what I'm talking about.
Exactly. So literally, we were having a conversation about it last night because I'm very, not anti, but I don't like that emerging middle class narrative because it takes away the majority of people who are not being reached. My question was, how do you justify the business case for this, right? I've been in rural areas standing on a mound of sand trying to find connection for a point of sale terminal. Companies always talk about the bottom line. It's very, very, very expensive to go down to the base of the pyramid, you know? And so how do we justify the business case? How do we make this work? And the second question is, Bank of America is interested, financial inclusion, going down to the bottom of the pyramid. Unilever wants to extend, their products down. And then there are young Africans who are confused, want to understand the space, but those conversations are not happening. So how do we catalyze these ecosystem partnerships to ensure that this actually works?
I think that is why forums like this are very important. What's more important is what we do with it afterwards. So do we just come here for the day, listen, have some good conversation, and then go away? I mentioned earlier, and I can't stress it enough, Bank of America, like other institutions. So let me be very clear. Financial inclusion is not part of my business plan. It's part of my making an impact in the region plan. There's a difference. So the amount of capital that we will deploy is therefore, frankly, limited. And that goes back to the point I was making earlier, that if we all know and understand the import of the bottom pyramid, it is expensive. So what are the initiatives that we can do to bring down the costs to attract more people to provide services? I think those solutions, those solutions lie amongst us. They don't lie in the external world. And we all need to think, and I keep saying we because I really include myself, is after a day like today, how do we disseminate some of the information and thinking that comes out of this? And so it's not just about hashtag,
Oxford BFA.
Oxford BFA, a great conference, great event. How many of us are and I say us, how many of us are really going to take 2 or 3 of these topics, come together and drive through a solution? Most of these fascinating solutions have come from the continent. It's with us. If there is so the thing about commercial organizations like mine is, without apologies, if there is a viable proposition, we'll embrace it. What we don't have the time or inclination for is to sit down and figure it out. We'll do it at some level, but there's a limit to how much that will happen.
Okay, 2 more questions. I think you have the mic, and then the woman in blue in the back for the last question.
Thank you. Deco Blacking's first black woman president of Oxford Brookes. So I thought I'd just put that out there. My question is, how do you invest in post-conflict and countries that have just kind of in a coup d'etat sort of civil war sort of season? So I'm from South Sudan originally, and a lot of the investment talk we talk about in Africa is very much countries that are very much more stabilized. They're not on the brink of conflict and of a diaspora that's spreading out. How do we actually think meaningfully about reaching the bottom billion in post-conflict areas? Because jobs are still needed, life goes on as normal, but a lot of that conversation seems to be left towards NGOs and those sectors that kind of lead on that, but actually be like a commercial and financial kind of perspective on how we do that.
That's a very difficult question. And I'm trying to think of the most user-friendly way to ask it. And I'm going to open up my brain to you so you can see some of the questions I'm handling as I'm trying to think of the right answer. What does Brian Moynihan say to our board members is the reason why we go to South Sudan now? Is it the scale of the business? Is it the certainty of being able to do business there and bring it out? It's hard for me to think of how that works commercially. What it does mean is that we need to be smarter and more constructive about how we embrace the NGO help and the any other kind of assistance that we have, with a clear focus for us as Africans to move the economy into a point where it can be funded, or rather it can be attractive to more commercial beings like Bank of America. But I have to tell you the truth, just going in there just because there's a conflict is not something we can explain to people, so we just don't do it. There has to be another compelling reason. And this is why, rather than just taking the aid or taking the money, like what I was saying earlier about data, it's to make the business case for data is a similar problem. But if someone wants to help, like for example, to sort out the migration issues around the world, and there are big pools of money now that are going towards what do we do with Africa to help Africa create an environment where her people stay in Africa. We should be vocal about data being part of that conversation. And that kind of funding is, to my mind, useful ways to engage in aid, especially in countries like South Sudan, where we do still need it.
And the final question in the back.
Hi. Is this working? Oh, it is. Thank you very much, Yvonne. I was here last year, and you spoke last year as well. And I think what you said about us taking some of these solutions back and doing something with it is really important, because I know from attending last year, I was really inspired to think of some things I could do as a person. But I think a lot of young innovators that come up with solutions for the bottom pyramid quickly find out that the people have very low purchasing power, and you start thinking about, how do I maximize my profit? How do I, manage? How will I run this solution effectively if they can't really pay me for it? And even though you go out being so passionate, then you get to the point where you're like, okay, I really need to think of how to fund this and how to pay for it and how to, make sure that I'm running it efficiently to keep doing it, so that it doesn't start after a few years and then, you run out of funds to manage such solutions. So that's something I want to hear more about. Like, how do you go with this mind to reach the bottom pyramid and find out that they can't really pay and you're trying to manage the resources? And also the thing about analytics that you spoke about, I think is a challenge on the continent, but I can only speak from a Nigerian perspective, where the education system is not really empowering people to know how to analyze this data and use this information in the right way. And I think such solutions are quite important at this point in time when data is really important. And this is something I'm also interested to talk more about. Thank you.
Okay. Something I don't talk about too broadly is I actually have a foundation that I set up we're in our third year. And my focus is on the bottom pyramid, but particularly women. So I know and understand what it means for that constituency to be difficult and inaccessible. I can feel them nodding, and I think we're running out of time. Let's take the conversation, because it's as we say, it's a long story, and we can't solve it with one glib answer sitting here. So let's have a conversation in coffee. Let's respect the time for the entire program, and let's have a conversation about it. It's tough. A lot of the stuff I do, I say to my team, we don't have a choice. We need to figure it out, and we do have solutions that come out of that. I'll share them with you after this. Thank you.
Thank you. And let's thank Yvonne so much.